G'day everybody, this is John Seville from Acorn Wealth. Here's your intraday update executive summary for the 21st of April. Right now, it's very interesting as we come into the last hour and a bit of the market. We have yet to close above the open range. So here's the big factors affecting the S&P right now. We've the resistance on the market on the open range is 2102.58. The low of support is 2072.37. So a close above the range or below the range is what we've been waiting for to look at where the high probability of direction for the rest of the month of April will go. So basically, those two levels have not been broken. We closed within that range yesterday. We went higher than the range, but we haven't obviously closed yet, and currently we are still under that high of that candle. So we're still in kind of no man's land with a slight bias to the upside. What's coming in, holding us back from above, though, is this trend line here where we see this triple top on the S&P 500. Now, if we look at the Dow Jones Global, you can see we had that triple top on the Dow Jones Global Index and actually rallied through it, pulled back to support, and are now rallying off that now. So again, there's a slight bias to the upside, but we're yet to be confirmed. Now, in terms of looking at a couple of plays that tweaked my interest. MEIP, I took a long position in here at just a little bit ago at around 224, and basically we're looking at this as a pullback to the support. You can see that this had a gap down. The high was $2.19. We're currently at 221, and that's just bouncing off support here. The 5-day exponential at 217. The 9-day exponential at 212, so just holding those levels. And you can see big volume yesterday, 5.14 million, over the previous day's 3 million as it broke out of that gap down resistance, and we've pulled back to that level today on it. So the selling volume was half of the buying volume yesterday, which is a good sign. So MEIP took a position in here, and that could be a nice potential recovery if we look at the obviously the Fibonacci levels. Now that we've broken the resistance, we could have a run up to either of these two targets, one at $2.76, so just a little bit under that, and of course the other one here at 353, so just a little bit under that. Either of those targets, if we're able to have a strong recovery, will be a potentially high profit scenario. We've got that one. These are really speculative plays. These are lower price stocks because basically these are the stocks that are performing. Are some of these low price potential breakout plays? FULL was another one I found. Also speculative. Don't have a position in this yet, but maybe looking to try and take a position if it starts to break this high, starts to break out. You can see this is consolidated across the board, and this had a lot of insider buying. If you actually have a look here at some of the insider transactions, I'll just bring this up on the screen. You can see there's a fair degree of buying all here in April from various individuals. The CEO also purchasing about 6.5 million on the 7th of April. So this was right around here when that breakout started to occur. So it closed that day at 362. We're only at 371 now. So this could be a potential big push upwards. And so FULL I also like as a long, and again a potential recovery play. And this could get up to at least 420, if not significantly higher with that amount of insider buying. Something may be going on. So FULL was the other one. Now on the short list, NUS, NUS Enterprises, has had a really big run up. For those of you who've been with us for a while, remember that we were talking about buying this around $40. It's since rallied up to 60, and so now this actually is the one that I like on the short side. And I think if we can break today's low here of 55.58, so kind of down at 55.53, I'd look at this to drop at least down to this 52 price. If not a lot lower. This could actually get down all the way back down to kind of this 44 zone. So that would be something else that I would also look at a potential drop. So NUS, and then I'd be looking at this kind of 9-day moving average as the resistance. The other short is CHD. And this is Church and Dwight Company. They were downgraded by Goldman Sachs yesterday as being fully valued, and so they were downgraded to neutral. And we can see here the money flow has come sharply out of the stock. There has been insider selling on this. They report on May 7th for earnings, and so this one is a potential momentum down play. You can see I've undergone a really strong rally, and it could be due for a bit of a healthy pullback. You can see this oscillates a lot, so this one could be something. If we have a look at the Fibonacci's, we'll measure from here to here first. So you can see we get a level kind of around this is where some of that key horizontal support would come in. But this could be a decent, at least a 5% drop down to its 38.2 Fibonacci at $79. And what I would do is reevaluate it then as it approaches that level and adjust the stops to allow it to continue potentially falling. But the 38.2, then of course we've got our next target there at 76.80. And probably the most I'd expect this to drop would be down to 74.50. So looking at anywhere from a $5 to $10 drop across the stock. So these are the ones ahead of the close that they're looking quite interesting. And of course we'll see you in the next executive summary.